Yes, as of late 2025, Robinhood fully supports 401k rollovers into its individual retirement accounts. You can transfer funds from your traditional or Roth 401k to a Robinhood IRA. This allows you to manage your retirement savings directly through the Robinhood platform, potentially accessing a wider range of investment options, including fractional shares and cryptocurrencies in self-directed Roth accounts. There are two main types of 401k rollovers to Robinhood: direct and indirect. Let's compare them to help you choose the best option. A direct rollover involves your 401k custodian transferring funds directly to your Robinhood IRA. This avoids the mandatory 20% tax withholding on traditional 401k distributions and is the preferred method to prevent potential tax issues. An indirect rollover means you receive a check from your 401k plan, which you then deposit into your Robinhood IRA within 60 days. This method is riskier because if not completed on time, it could trigger taxes and penalties. Here's a visual representation showing the difference. In a direct rollover, funds flow straight from your current trustee to Robinhood. In an indirect rollover, funds come to you first before going to Robinhood. We recommend the direct rollover method as it avoids the 20% tax withholding and minimizes potential penalties. Always consult a tax professional to understand implications for your individual circumstances. Generally, you're eligible to roll over your 401k when you're separated from service, meaning no longer employed by the plan sponsor. However, some plans allow in-service rollovers, enabling you to transfer funds while still employed. Check with your 401k plan administrator to confirm your eligibility. You'll also need your 401k plan details, social security number, and to complete Robinhood's rollover form. Direct rollovers typically take 5 to 10 business days. Tax implications vary based on the types of accounts involved in the rollover. A rollover from a traditional 401k to a traditional IRA is completely tax-free, as both accounts are tax-deferred. However, converting from a traditional 401k to a Roth IRA is fully taxable as ordinary income in the year of conversion. This can be beneficial if you expect higher taxes in retirement. A rollover from a Roth 401k to a Roth IRA is tax-free since both are funded with after-tax dollars. Early withdrawals from a traditional 401k before age 59.5 incur a 10% penalty, plus income taxes, unless certain exceptions apply. Proper rollovers can avoid these penalties. Always consult a tax advisor for advice tailored to your situation. To initiate a rollover to Robinhood, start by opening a Robinhood IRA account if you don't already have one. First, open a Robinhood IRA account if you don't already have one. Next, initiate the rollover process through the Robinhood app or website. Provide the necessary information about your 401k plan and follow the on-screen instructions. Choose a direct rollover to avoid potential tax issues. Robinhood will then handle the communication with your 401k custodian to facilitate the transfer. Ensure you complete all steps accurately to avoid delays or complications. Avoiding common rollover mistakes and penalties. A common mistake is missing the 60-day deadline for indirect rollovers, leading to taxes and penalties. Always opt for a direct rollover if possible to avoid mandatory 20% withholding. Be aware of potential custodian transfer fees, though Robinhood itself doesn't charge rollover fees. Double-check all information provided to ensure accuracy. Consult a tax advisor for personalized advice, especially when considering a traditional to Roth conversion, to understand the tax implications. Fintech platforms like Robinhood are increasingly popular for retirement rollovers, driven by their ease of use, low fees, and access to diverse investment options. Current trends include the rise of self-directed IRAs, allowing investors to manage their own portfolios, and a shift towards Roth accounts for tax-free withdrawals. Looking ahead, future developments may include AI-driven investment advice for personalized recommendations and expanded support for alternative assets like real estate and cryptocurrencies. Regulatory oversight is also expected to increase, ensuring investor protection and compliance with evolving financial rules.